what is not listed on this that you would pay every month? The principal payment. You are going to pay the principal payment every month, and it is not deductible. Instead of making that deductible, the government came up with the concept of depreciation. Depreciation is the write-off of the value of the asset as it depreciates. But let's talk about the tax angle of depreciation for just a second. So the government says that if you buy a $200,000 house, you have to take away the value of the land, and then you can depreciate the improvements, which in this case is $160,000 over 27 and a half years. So be aware that the improvements are going down in value, but hopefully the location is going up. I mean, the value goes up, but why is it going up? It's not because the improvements are going down in value. It's the land, it's the location. That's why we started off here tonight talking about buy a property that you think there's going to be growth in that area, wages are going to go up, or you can change the use. Okay, so Walt bought this house for $200,000. He sold it for $300,000. How much is his profit? How much? 100. Very good. And capital gain tax, 15%. The tax would be? Very good. So depreciation over 10 years, $58,000. 25% tax rate is the recapture rate. So 25% of 58 is? Very good, very good. Well, we're going to round it up to 15 just because the rest of us are not math whizzes and we went to public schools and stuff. So the total tax would be $30,000. The question is, who would like to not pay this tax? And you have to raise your hand if you would like to not pay this tax. Okay, so what the IRS allows is for us to do a tax-deferred exchange. Walt remembers this, and so he sold that home in December, put it under contract in December. It closed January 1st. Being the smart investor that Walt is, he started making offers on other houses contingent upon his home selling sometime, around January 1st. So he's out making offers to get that money reinvested. At the closing on January 1st, he tells the title girl, I want to do that 1031 exchange. Now this is a good test for your CPA, all right? So when you go in to talk to your CPA about